Meanwhile, the Federal Reserve kicking off its two-day policy meeting today with its latest decision on rates due out tomorrow. Will they announce a taper? What are markets expecting? And how will it affect what's already been a volatile month? Joining me now are Jim Caron, Global Fixed Income Portfolio Manager at Morgan Stanley Investment Management, and Jeff Krumpelman, Chief Investment Strategist and Head of Equities at Mariner Wealth Advisors. Great to have you both here. Jim, I'll start with you. What's the market expecting from the Fed this week?
Well, first, Kelly, thanks for having me on your show. I think there are some mixed feelings. I believe that the consensus view is that the Fed will not talk very, very tough on tapering at this point. There's just too much going on, whether it's some of the credit risk conditions coming out of China, whether it's the infrastructure bill or even the debt ceiling. There's just too much room for a policy error. But I think what's important, though, is that the dot plot that does get released will probably reveal a hawkish result. But then Powell is going to spend some time at the press conference trying to walk that back, most likely, and put things in more dovish terms. I just think it's too soon for the Fed to act in a very hawkish manner at this point with everything that's going on.
It's a risk they have to manage, Jim, though, because they have near-term market conditions, which for all the reasons you mentioned, they can sort of take it easy, say better safe than sorry. On the flip side, you have people really upset about what's going on with inflation and supply chain issues, and they think it's all a result of the Fed stimulus. It's a result of the trillions that have been spent on the federal side of the equation. So that's causing headaches in D.C. in terms of passing the next spending bills. Could it also create headaches for the Fed, where people realize, well, at some point, these conditions are too supportive?
Yeah, well, actually, absolutely. And I think that's an excellent point, because I think there are two parts to this, right? One is tapering, so the reduction of quantitative easing, which effectively was really there just to address liquidity concerns. I think that at this point, the market is ready for tapering. I don't think QE is necessary. The other is tightening, and that's raising interest rates, and that actually increases the cost of credit. So what Powell tried to discuss at the Jackson Hole Symposium was he wanted to break the linkage between the two. So yes, it's probably time to taper, and that probably gets announced in November, December, and enacted in January of 22. But it may be not so sequential that you do tapering and then immediately thereafter you start to tighten. There might be a long lag period between the two. And that's what the dot plot, I think, is going to confuse. And I think that the chair and the vice chair of the Fed are more in the camp to say, let's fix the plumbing. Let's reduce the tapering at some point, announce that at some point later this year. But that doesn't mean that there's going to be tightening. And that differentiation, breaking that linkage, is very, very critical at the moment.